Paul, it seems that the markets have been, pushed up in recent sessions by talk and a promise of an oil embargo on Russian oil from the EU. But now there's been a little bit of softening on that, as we were hearing from Maria, around in particular the transportation of Russian oil. Talk to us about what it is that's weighing on the oil price. Is it that, or is it Chinese growth fears?
Hi, Anna. I think this week it's very much what's going on with sanctions, or the European Union's efforts to sanction Russia, and that softening as you talked about. Yes, Chinese demand, or the COVID lockdowns and how that's hitting demand in China is certainly weighing on the market, but that's been a theme for the last few weeks, and there's nothing really new in the past few trading sessions. But these sort of complications that we're seeing among EU members about just what to do and how hard to go against Russia is new, and that is what has led to Brent and WTI dropping by about 6% this week to slightly below $105 a barrel. We're still at very high levels, of course. Oil is still significantly above $100 a barrel, but I think this week's news gives signals to traders in oil markets that perhaps the EU is not going to go all out on banning Russian crude exports, and then at least European companies will still be allowed to transport Russian oil, even if they can't take it into the EU.
Paul, just interesting enough, you kind of say this is more about this softening of potential sanctions in the EU and Russia, but it seems to me like we've seen more downside from the softening than we saw upside from the original threat that they were going to, impose that ban. Does that suggest that overall the backdrop for oil is for softer prices if we're getting a much bigger reaction on the downside than we are on the upside?
It's possible that there's more of a downside trajectory coming for oil in the short term, primarily because of what's happening in China, and as the EU argues and can't find unity over what to do on Russian sanctions. If you look in the longer term and you look at what's happening in the physical markets and pure supply and demand, it's still an extremely tight market. The global markets are probably undersupplied at the moment, and most analysts are saying that it will probably become even tighter still as China starts to ease its lockdowns.